Hey guys, this is Market Update. I've got the Bitcoin hat on. We only bring the Bitcoin hat out at important events. And this is a serious event. We're at a macro turning point. They're printing money again. Well, it's not actually QE, y'all. It doesn't matter. They're literally printing money. The central bank pressed a little button and they're going to buy tens of billions of dollars worth of government bills. And that's going to feed into markets. It's going to reduce interest rates. It's going to increase liquidity. And they tried to bang us. See the stock market down yesterday, finished at an all-time high. They tried to bang us yesterday back into the 80s. No one is having it. This is an ascending wedge right here. Beautiful, absolute. Look at this, man. Look at these lows just getting bought up day after day. Let's go. Do not be fearful, all right? Be hopeful, be aggressive. You know Bitcoin is a great asset. Underperforming other assets right now, great news. This is where we can make money. So look, the ISM is right down here and they want to pump it. They do, right? They've had enough. Liquidity's tight. Tariffs are a tax. They took money out of the market, the actual economy, right? Real businesses, small and medium-sized businesses here. And they've had enough. The banks are squealing. They need to drop interest rates and they're printing money to buy bills, and that's going to help push GDP and ISM higher. Absolutely beautiful. We're in this cycle here. It's definitely not over for this cycle. And everyone, of course, is scared and fearful and everything. Oh, the price might go down. Oh, the 4-year cycle. Look at what they're doing. The central bank cycle rules everything, and they're cutting rates and printing money. It's great news. This is the credit cycle. You can see we're nowhere near the peak in the credit cycle. So interest rates can continue to come down, right? And now they're going to say, well, we're going to cut in December. We're not going to cut next year, blah, blah, blah. Inflation's coming down. Growth is actually quite high and will remain so. On the fiscal side, the government wants to bring in the BBB next year. So no tax on tips, no tax on overtime. That's going to actually be a big stimulus to that certain part of the economy. There's other things in the BBB that are going to be stimulative as well. And any money that they do earn from tariffs is going to be used to, one, pay down debt. That's great news for bond yields, especially on the long end. And the other is we're going to give some money away. We're just going to helicopter it in. Never, never, ever, ever, ever doubt currency manipulation, currency debasement. Look at SOFR coming down. This is good news for markets, right? So just be bullish. Just reject bearishness. Reject being a loser, right? Buy, hold, be aggressive, be confident. This is a great asset. And look, we're just creeping higher. This is beautiful. I expect us to go higher. Why not? Yeah. And we're underperforming other assets actually right now. So what's the trade? This thing has to catch up. This has more fundamental growth than those other assets. If you do trade Bitcoin, crypto, or anything else, you can trade on Bybit now. TradFi, you can trade everything on Bybit. I'll leave a link below to Bybit. Click that, go and sign up, make a deposit. Anything you deposit, they'll give you a deposit bonus to trade with, up to $30,000. Bitcoin tends to get the most amount of interest when the price is high and it's outperforming instead of underperforming where no one's interested in it, which is kind of like the total opposite way round of how it should be done. But look, there are certain assets that you can buy if you want to make investment returns. They have growth rates. The S&P is 12%, NASDAQ 18%, your house 7%, gold been like 5-6%. It's had a good year this year. Bitcoin has been 50% over the last few years. It's been 100% before that. So those are the growth rates. Now, when one of those assets is underperforming versus the others, that tends to be the time when it's the best trade and when the least people buy that thing because they're always interested in the thing that's outperforming for some reason. So gold's outperforming. It's had a great year. Maybe it can continue to do well. But the general growth rate of gold being 60-70% a year, that can't last for 10 years, right? Whereas Bitcoin's growth tends to be higher than the rate of growth of gold, right? And so when Bitcoin, as it has done, is underperforming the last 12 months, then that's a great trade, right? That's how I think of things. And these trades don't work out perfectly like in timing and everything like that, right? Because the market can like a trade, it can go into it for a period of time. The market doesn't like Bitcoin now, right? It's in a hangover from the ETFs. Okay, absolutely fine. But you buy the thing that's underperforming when it is underperforming versus the others if it has a higher growth rate. So look, they're printing money, 8 billion here, 6 billion there, great. 1 to 4 month bills is 75% of the weight. 4 to 12 month duration, 25% of the weight. Where's the money coming from? Thin air. That's it. Is it going to buy duration? Is it going to feed into markets? Yes. Yes, it will. Because they've printed the money out of thin air and we're valuing assets in dollars and they've just increased the supply of dollars. And they're going to do so for the next 6 months. So look, these trades don't work out absolutely perfectly. In fact, what happens is people that are looking at these things kind of buy lows in certain trades, and the trade picks up, and of course the momentum picks up, more people come in, and then some people will buy the top, not knowing that actually the top indicates that that phase of growth is probably over. It just is what it is, right? That's the cycle. US spot ETF net flows for ETH, you can see we're just picking up here. When you get inflows, it tends to be good for the price. You can see that there's a potential kind of recovery happening here. Now, of course, we don't know what happens short term, but you can't be so fearful in everything, right? You just have to trust the process that dollars will be debased over time. Buy strong assets over time, be consistent, don't get too high on the highs, don't get too low on the lows. But look, Bitcoin is heavily oversold on the RSI. You're talking about historic oversold levels, typically areas where, look, Bitcoin has a growth rate. It can only stay oversold for so long. Those were the bear markets before. Look at this. Do you want to buy something that has a higher growth rate than all those other assets when it is massively oversold? That's typically a good trade. Yeah, we can go even lower, but it doesn't matter, right? It doesn't matter because that's the trade. The trade is this asset has growth. This is a strong asset. I'll put my dollars in that versus other assets because it has higher growth in them and it's underperforming. Or you can just dollar cost average over time, right? It's up to you. But look, strategy is starting to buy a little bit again. These guys aren't blowing up. Yes, it's a volatile stock. I'm not here to promote strategy, but they're not going to blow up. They're going to keep buying Bitcoin, and so many other people are going to keep buying Bitcoin as well. And so you get pockets. It's a new industry. It's not perfect. It's not like the S&P, which has lower volatility. If you want the S&P with lower volatility, go and buy it, and you're going to get lower returns over a 10-year period as well because it has lower growth rates, right? So you go into the asset that has high growth, given the amount of volatility or whatever else that you want to get in your portfolio, and that's about it. And surely if you're trading and you want to put money for one asset or the other asset, when one of these assets is underperforming the others, then go in. Like, for example, if you're trading stocks, you just kind of dollar cost average the NASDAQ or the S&P, right? But during a bear market, a lot of stocks can really underperform the market. But if they're strong businesses, then you actually buy those. You take some more risk when risk is cheap. My base case at this point is that in the US, the Trump admin is going to broadly achieve everything they set out to achieve. And that means a lower deficit, and it means a more sustainable fiscal path. Leaving the politics aside, because it's not my politics, you have to print money. That's a given, right? All these governments are running deficits. So let's compare and contrast the UK and the US's approach to this. This is the deficit here, right? And it's actually coming down in the US. But you must print money. You're never going to stop spending on the outlays. On the receipts, what you have to do is increase the amount of currency. You can't increase tax because if you increase tax, you take money out of the economy, which reduces GDP and everything else. So you can't tax more because you actually take less. What you have to do is increase the amount of currency, inflate the price level, and that means that the nominal dollar amount of tax receipts that you get actually comes in, so you can reduce the deficit between what you spend and what you take in. Now, there's two ways to do this. You have to print money. That is it, right? It's a debt-based system. Money has to be printed. There's two ways to counteract that. The first one is the US way, where they're saying massive real economic expansion, more energy creation, more energy growth, AI, investment, infrastructure, everything else. Let's build, let's go, let's be positive, right? That's one way. You increase productivity, you increase output of everything, and you try and counteract the inflationary pressures of money printing, which has to happen. Or you have the UK way, which is let's just create more debt. Let's just create even more debt. The government gets bigger and bigger and bigger. It's now almost 50% of the economy. There's no economic growth. There's no energy creation. There's no trade, right? It's a farce. It's a circus. And you're going to be poor under that environment because the more money that's printed without any a corresponding increase in productivity or goods or production or anything else, that means people get poor. Inflation in the UK, I think, is like 3% right now, and wage growth has been flat for 20 years. Okay, so you're getting poorer. Or you can actually have growth in the GDP, economic activity, and try and grow wages and get some, a counteraction to the money printing. But money has to be printed, and that's the trade in Bitcoin. Why do we shrink the balance sheet, sir? So we can expand it again. This is the Fed's total assets. Bernanke in 2008. QE is temporary, and the Fed's balance sheet will soon be lower than when we started. That was right here. Dear. So look what happens, right? They've stopped here as well, right? So we're going higher again for the Fed's balance sheet, and they'll say it's liquidity operations and etc. They're printing money out of thin air. It has to happen. So the real question is, Do you want to just sit there and completely crush the economy with no growth, or do you want some productivity to try and counteract that? That's what the US has chosen. Sometimes trades do kind of stand out to you. That's not to say you can't get a huge amount of volatility in markets. Look, Bitcoin can go down another 20, 25% easy, right? Just from sentiment, or some people are worried about things, and there's a small gap in time between a bad data point and the Fed reacting to it or whatever else, right? But big picture, you have an asset class that has quite high growth. Just call it Bitcoin, right? Has higher growth than other assets. It's very weak in relation to its trend. Everyone's capitulated. You can see trading volumes here down 30%. I think in other markets previously, Bitcoin would have been down 50% right now. Easy, because retail's just out, right? They're done, they're finished. No one's doing anything. No one wants to trade, right? Everyone's just completely fed up with it. But then there's so much fundamental stuff under the surface that's happening. And that's typically when you see really good trades. It's not to say Bitcoin can't be volatile, but a trade where everyone's capitulated and hates it, and then you've got fundamentally fiscal stimulus coming at the start of next year because of the BBB, and then you've got the SLR changes, which are stimulative as well through the banks releasing capital there, and you have monetary stimulus from the central bank who are printing money right now at the start of next year, and you have all of the general regulation that is going to just keep this demand. You know, I think Bitcoin would have been down 50% plus in previous bear markets, but because of just the more institutional nature of Bitcoin now, the buyers, so many buyers, US states, countries, central banks, sovereign wealth funds, everyone, it's gone down 30%. This here, Congress is urging SEC chair to allow Bitcoin and crypto in 401k accounts immediately. This is Congress saying basically, let's go, right? Let's put Bitcoin and crypto in 401ks. Now there's going to be opposition, I'm sure, but they're pushing for it, right? They're pushing for it on the surface. There's a lot of positive things that are happening. As I told Maria Bartiromo last week, US financial markets are poised to move on chain. US financial markets are poised to move on chain. So you've got Bitcoin going everywhere, now being allowed as capital in banks. You've got tokenized equities and everything else moving on chain. Most of that is on Ethereum, to be fair. The market cap of tokenized stocks is at an all-time high of 800 million, up 30x. When you're seeing this huge growth, this is different now. You just can't be thrown around by retail, fear and greed and everything like that. Look at what's happening. Look at the fundamentals here. The fundamentals are fantastic. And Bitcoin priced off 30%. ETH is still at 3,500, right? It's crazy. So 800 million, that puts tokenized stocks coming into maybe the top 100 of assets, right? Now, these are individual stocks, right? But generally 800 million for tokenized stocks. This is Tesla, Nvidia, etc. You're going to see these moving up and up and up into probably the top 10, 15 of assets in crypto. So there's so many good things fundamentally happening. Fiscal stimulus and monetary stimulus and all of the regulations around crypto. It's a fundamentally fantastic time. Prices are off, brilliant as an investor, right? If you do trade Bitcoin, crypto, or TradFi assets, get the Bybit deposit bonus down below up to 30,000. I'll leave the crypto course down there as well, 300 videos on how to trade, how to manage your portfolio and everything else. You can talk to me in the Discord server as well, link below. I'm James, this is ManagerG. Cheers for watching, and I'll see you in the next one.